Now, I'm very interested in anything that's related to the Canadian dollar since I live in Canada. Now, not only do I hold a US dollar bank account, but I also hold long positions in the US dollar Canadian dollar Forex pair, buying on certain types of dips. And we've had a contraction in our economy since oil prices have tanked, and Ontario, once a manufacturing powerhouse, has really become the province of debt and increasing hydro rates. When there's a contraction in the economy, the Fed banks, they look to interest rates, thinking that that will spur the economy. And we had a Bank of Canada rate announcement, and as many of us expected, the rate was actually cut for the second time in 2015. Now, cutting rates may have the effect that the central bank thinks it will, but there are also two cautions as well. Canadian debt levels hit a record high in the last quarter of 2014, and major cities such as Toronto and Vancouver already have housing prices that really some should be ashamed of paying for what you actually get in terms of the home. These types of cuts can just make these problems worse, as it does enable people to take on more debt cheaply, that is, until the rates start to increase. Now, I've written about charts and the stories that price action and structure tell quite a bit in the last little while. This is not going to be an exception, as for the second time this year, I've taken off some of the position known as scaling out, although there were two other points that offered buying opportunities that were taken. So let's talk about the two scales, because it really hits home about watching the chart and seeing what it says. So this is the weekly US dollar Canadian dollar Forex chart, and it's a chart for longer term trades that I'll look for clues as to what context the market's in. Now, this will lead to, or not, plays off of the daily chart. That's different. On this weekly chart, this candle is certainly out of the ordinary and could be an exhaustion that may lead to a range or a healthy pullback. Add that to B. This is a swing level that was put in place between 2008 and 2009 before the Canadian dollar decided to test the low of 2007. It's a pretty important level, and I was thinking that price would make a run for it, so I was getting ready for the daily chart to lead the way out. C. The US dollar was losing momentum. It's better seen on the daily chart though, as it grinds higher, but each candle was closing bull except for one whose low was not broken. Price was inching higher into the potential resistance zone with the bears printing top shadows on the daily, and this was the area where the scale out took place. D. Bottom shadows on these candles gave a sign that bulls are coming back, and was a good area to look on the daily chart for opportunity. Now you can see that the chart was given the clues, and all you had to do was decipher what it was telling you. So we went into a range through the first quarter of the year with a strong momentum candle shattering the floor, which simply gave bulls an attractive place to buy. It also gave those with short-term profit expectations some really clear shorting opportunities. Heading to July 15th, the day of the Bank of Canada rate cut, there's another story that the chart's telling. Now, I don't read the current candle as an exhaustion yet, but the scale out has more to do with the rate cut. Resistance broken, resistance overhead, and also that today's candle is certainly a that's different candle. This is the resistance zone that we saw earlier that was held for months, and the candle of the 15th took it out. B, this is a potential resistance zone that was set back in 2008-2009. That is the same zone where the buyers of the Canadian dollar, sellers of US dollar, stepped in quite hard to drive the Canadian dollar into strength. C, this is a weekly trend line, and you can see the duplicate one is being breached. D, it's an interesting area because this was a bull flag, and while the detail is not here, but it can be inferred by the black doji, once it was breached, price chopped around above it with some weak bear interest. This alerts me even before the news that there is a potential play coming. Now, this can also be a buying opportunity in a retracement, except price structure in terms of what was potential resistance is just above. It works, but in my books, it was a low probability trade and not something I would take. E, this is the zone where the scale out took place. So the question is why? Candles like this are a gift where you can amass the amount of pips or points that can take days to make. However, that was just one of the pieces of the puzzle, and now we can look at the location on the trading chart. Now, breakouts are usually failures, and at the very least, we generally see a pullback in price. The potential resistance of 2008 is not too far from this level. So is it possible that price will just ram through the resistance? It certainly is, but so is price stalling for time and then slamming back down. And oftentimes being stuck in a range not only holds up your capital, but it can really exhaust your mental capital as well. And as traders, we are risk managers. And reading the chart the way I did, and look, you may read it entirely different, it just made sense to lighten the load and just see what plays out. Now, these are not difficult concepts to understand, although they can be difficult to accept, to trust, and to implement. Now, the principles laid out here have been around for decades, and you'll be well served to study them and perhaps implement them into your own trading.